All right, welcome aboard, everybody. My name is Craig Carlton. Welcome to the Investor Connection. It's Tuesday night, so if you're here, you're in the right place. Thanks for joining us. Yeah, just before I get started, we have a brand new face on today. You guys are usually seeing either Dana or Jenny or Stephanie. We have not quite as pretty of a face as those three gals, Tim. But Tim, thank you for joining me. I appreciate it. How are you doing tonight?
I'm doing fantastic, man. Thank you guys for having me.
Yeah, it's a pleasure. We'll get into Tim and introductions and all that good stuff in just a second. But before we get started, I want to welcome everybody that's on the call here tonight. I noticed that our good friend Dana is watching. Dana is a seasoned real estate investor, and she is on this call tonight because she knows there's going to be some amazing value provided by our super special guest, Tim. This guy's a private money lender. He is going to rock your world today, going to give you some great advice. We're going to keep it fairly high level, but I also want to mention we're going to keep it to your questions. So if you've got some questions, Tim kind of knows a bunch. He's been doing this for quite some time, and he made a promise to me that this will probably be one of my easiest sessions. So I'm hoping to keep him to that, and we'll have a really good time. So, but before we get started, one other quick thing. If this is your first time you've been on the new Investor Connection, the first session, please type in the number 1, and then let me know where you're located. Right, Tim, you do business all over the country, right?
Absolutely.
And so do our members. They're all over the country. And so what I'd love to know is if this is your first session, 1, and where are you located tonight? Where are you tonight, Tim?
I'm in Dallas.
Love it. How's your weather today?
It's one of those beautiful days that I've taken a couple walks with my wife and my dog. It's hard to stay indoors.
Yeah, I hear you. Today I'm in Tampa, Florida. Today was a little bit. It was cool. It was like 76 degrees out. So I had the back door open the whole day. The cat was running in and out. It's been a beautiful day. So good stuff. But yeah, so everybody joining, thank you so much. Charles and Oscar and Wanda, Lawrence, Jerry, Tom, Mario, Kristen, William, Farhan, David. Put your name in. I'll say it. I promise. I see a few other folks there. Angela, I know Dana, you're on the call tonight. So excited to have you here. Tom, thanks for joining us. TJ, David. So a whole bunch of folks are showing up for us today, Tim. So we're going to give them a great session. I'm very excited. Danny Pyers is someone who comes to a lot of our sessions. So Danny, welcome to the session tonight. Luis, thank you for joining us as well. Well, let's do this. Oh, San Francisco Bay Area, Northern California, Brian, thank you for joining us. We appreciate it. Let's hop in. So tonight's going to be kind of informal. You're going to get a lot of good information, but we're going to keep it, kind of informal. We're not going to rely too much on PowerPoints. I've got a few bullets that we're going to show and whatnot, but really this is going to be a conversation that Tim and I are going to have for you all right? And this is really talking about how do you build wealth with other people's money. All right, so let's go ahead and get started. Again, I am going to go on the slides a little bit, so bear with me on that. Now, if you're new to the session tonight and you don't have our software, you're going to get a couple of opportunities to try the software out for free. We've got a really special deal right now. So if you wanted to, you can take a picture of that QR code that's on your screen. That'll bring you to our sign up page. You can also go to connectedinvestors.com and then you'll be able to sign up for a free trial. And we actually have a special bonus right now running. So if you're interested, I would absolutely take advantage of that, getting those extra 2,500 free skip traces. So definitely take advantage of that if you can. All right, so let's talk about a couple of myths. All right, Tim. So the first thing that we hear when it comes to money, comes to funding or real estate in general is you need to have a lot of money to do real estate investing. I know, I love it. I love the smile on your face. How do you respond to that as a lender? How do you respond to that to people, when you hear that?
You know, I hate anything that's limiting in beliefs or conjecture, right? So anytime anyone tells me no or I can't do something, my first thing has always been, oh, but tell me how, right? And so number one, when I got into this business a year out of the Marine Corps, and that was 23 years ago and thousands of houses ago, I had no money. I didn't even know how to manage a checking account. And the way I got into it was by working for someone that was in it and learning how to row the boat without having to own the boat, if you will. There's lenders like Turnus out there that will do 100% financing. Now, that doesn't mean you don't have to have any money. In general, when you take on a financial commitment, you should be able to support that financial commitment. But at the same time, there's so many different ways that a good deal will find money. It is completely false to say that you have to have a lot of money to be a real estate investor.
Yeah, I would agree. And the only other thing that I would add is you may not need tons of money to do deals, but you're gonna need some money, right? You got to do your marketing, and there's going to be earnest money deposits, and not all lenders are going to give you all that money, so you do need to have access to some capital. So straight from the horse's mouth here, guys, you don't need to have a lot of money, but you do need to have some, and you need to know how to work with it, right? So that's what we're going to try to help you with a little bit tonight.
And Craig, the only other thing is different strategies require more capital.
Exactly.
So we, like at Turnus, we have a wholesale loan that is made for investors that want to take down a house, clean it out, and just resell it. Well, that loan only is 1 point, and you only have to have 2 months worth of interest in the bank account because it's only a 60-day loan. Now, if you're doing a major rehab that's going to take 12 months, that's a $700,000 house, completely different capital requirements. So never let capital limit, or don't let your exit strategies limit when you can execute them, if that makes sense.
Yeah, totally. I love that you said that about exit strategies, because that is very, very important. So good stuff. And I'm going to keep my eyes peeled here on the questions just in case we get some good ones while we're going along. So bear with me. I got to keep my eyes peeled there. All right. So, all right. Now the next myth is, let me see if I can get this to work. The next myth is right now, or in general, interest rates are too high for real estate investing. How do you respond to that?
So as a lender, I love high interest rates.
Of course.
We'll just disclose that. But as a borrower, I hate them. But just 2 weeks ago, I refinanced a house that my wife and I owned here in Texas at a 6.5% interest rate. And at that time, we had a 4% interest rate. And investors may be thinking, yeah, this guy's an idiot. We're going to disconnect because, I mean, he just went from a 4 to a 6.5. But the point is, we had to put about $30,000 into the house. We'd owned it since, I think, 2018, something like that. And we wanted to go buy another house. And the only way to get additional refinance money out of the house was to improve it to where it could get the maximum market rent. So, just like all investors, our investment company, we try to make it live on its own. We don't like to keep giving it money. So we spent $25,000 to $35,000. I don't know the exact number on the house, and got it rented out. The rent went from like $1,750 to $2,180, and right, so really big rent bump. And at that point, we could refinance at 6.5, do a cash out refinance on a 30-year loan, and pay back the money that we had just spent to bring the house back kind of up to pristine condition.
Yeah.
And put another $30,000 in the bank. So that $30,000, I can go buy another house and make 15, 20% with my money by buying another house. So if I'm borrowing at 6.5% and I can go make 10, 15, 20%, to me, it's always a no-brainer. That's how I let the tenant pay back that money that I borrow, and then I go buy another house and let a different tenant make me money there too.
Yeah. So let me ask you this. So what coming up for me and maybe some other folks here is the BRRRR method. How does that play in what you all do? Like the buy, rehab, rent, repeat, all that. How does that work for you?
So I've been executing the BRRRR method personally since before BiggerPockets came up with the term. I wish I'd learned about it before. So we do 100% financing up to 70% loan to value. So an investor could go out, buy a house, get a good deal on it, and let's just say, and on day 91, you can do what's called a rate and term refinance, where if you're not pulling a bunch of cash out, you can go refinance the whole thing. You could literally, in this scenario, take down the house, spend a couple months interest, get a security deposit, get the house rented, day 91, close on a refinance at about 72% loan to value, because you can include some of your closing costs in the rate and term calculation. And I mean, you're looking maximum 3%, maybe 4% cash out of pocket. And I mean, I'm telling you, when you can make your money cycle like that, it's It's the way to go. I think the burn method will be the most common strategy in the next 2 years beyond flipping and even wholesaling.
Well, how does subject to then play in that whole thing, right? Where somebody comes in, I don't know if you deal with that at all in your world, the creative structures.
So in general, as a lender, I'm not a huge fan of when someone assumes a loan subject to my financing without
Yeah,
me saying it's okay.
yeah,
Um, I highly advise someone talk to a real attorney before they do it, not someone that's selling you a course. It can be dangerous to buy subject to. We as a lender are investing in artificial intelligence and digital surveillance
yeah.
to find out very rapidly when a deed has been transferred on a home. With all the wire fraud and mortgage fraud
Yeah.
that's out there, we have to be hyper vigilant, and now we can use technology to do so. So we don't finance subject to transactions. We're happy to refinance a subject to transaction. And
Hmm.
I just ethically and legally advise people to seek proper counsel prior to building their house on seeking sand.
Yeah, sure. No, I get that. And we get a lot of folks that are talking about subject to and the due on sale clause. And sometimes it's good to hear it from a lender's mouth, sort of how you feel about that. You know that it's happening. Let me ask you this, just playing devil's advocate. If you've got a very good individual, so say you find out that that the title is moved and you're now, okay, where is this? And you find out, but the person that's doing it is actually really, really good at what they're doing. Are you less likely? Are you more likely? Where would you stand in there? Would you want to have a conversation with them?
I'm calling the note due in full immediately.
You are,
Uh,
okay.
yeah, and here's why. Every lender, people say, oh, they know and they don't do anything. It's just not true,
Mhm.
because there's a statute, it'd be waiver, right? And if I knew that you were violating the loan covenants and I waived that violation, it would give you a lot of cause in court to say, well, no, he doesn't enforce his loan agreement. So loan agreements have to be enforced in full unless modified in writing. And so, in my job, I raise investor capital. So my job
Mhm.
is to protect my investors' capital.
Right.
So I have no choice but to enforce the loan documents as written.
Yeah, fair enough. No, I love that. So there's a point of view. I love that. We had Michael asked a question. You had made a comment. You said take down the house. You said take down the house mean to the studs or ground. What were you saying there?
Okay, I meant like close on the property. So uh, here's an example. So I still actively buy houses. I'm not just a lender. I'm an investor. I send direct mail and do all the skip tracing and all that. I don't. I have people that do it. But right now in Fort Worth, Texas, there's a $320,000 house that we have under contract for $190,000. It needs about $37,000 in work, but it's all cosmetic, and there's people living there right now, and it's move-in ready. So our plan is to close on it next week at 190, clean it out, clean it up, cut the bushes, real quick facelift,
Yep.
and we'll list it at about 250. And I would imagine it'll sell for 245 in a week or two,
Okay.
because I'm 60, 70 grand below market on only 40 grand worth of rehab. So that's called a wholesale, halfway between wholesale and halfway between retail. So
Yep.
when I said take it down, I meant no, not tear it down. Uh, I meant go ahead and get it in your name so that you have the flexibility to market it to the mass market instead of just your cash buyers list.
Yeah. So, Tim, forgive me. I've heard wholesale. I've heard of it before, but you mentioned a really quick sort of short loan. Talk about that again real quickly, because I don't know enough about it.
Yeah, so I mean, typically the wholesale strategy is uh, it's rapid. It's these investors are paying them off in 30 to 45 days.
Right.
So to make a more simple loan based off the as is value of the purchase price, I created this loan that I would use. So everything we do at Turnus is like, what does the customer really want?
I love
And
that.
I've been wholesaling since '08.
Okay.
So I made this loan to where it's only 1 point and then it's 12% interest. And we loan you the purchase price or the as is value. We do a quick valuation online, and whatever's lower, right? So if the as is value is 210 and you're buying it for 190, we'll give you $190,000 at closing. You pay your points and fees and all that, and then you've got 60 days. If you can't pay it back in 60 days, we'll give you one 30-day extension. If you change strategies a lot, it's probably not the right loan for you, because we're going to need you to refinance into a fix and flip loan if you decide you want rehab draws and all of that. But we've got people that are paying them back in 2 weeks. We got people that are 30 days. I've had one go 90 days, but in large, it's the investor out there that just wants to get a quick turn on their money. They've got that nice house that's in a nice neighborhood that, for whatever reason, the seller needed to move quickly, and they can take it down and not take it down. They can acquire the property, get it in their name, and then get it on the market quickly. And the cost to extend is 1 point. I saw the question.
Yeah. Danny was asking, it's 1 point to extend it. Love it. And then what's great. Thank you for sharing. What about multifamily lenders? What amount of cash on hand is needed for multi-unit properties, say 15 to 30? Omoro asked that.
Yeah, so it's going to be really hard to get into a complex scenario like that. It's going to depend on seasoning. If it's cash out refi purchase, whether it's in place rents or pro forma rent. I would tell you it's going to be anywhere from 20 to 40% of the project cost, depending on so many variables. We'd have to talk for 3 hours.
Yeah, sure. Okay, perfect. Okay, good. Let's see. How can an investor purchase auction properties that require a 48-hour closing? Can you work with them?
I can close in 48 hours.
Okay.
We close all the time in 48 hours. The only requirement is, depending on the auction type, we do have to have clear and marketable title before we fund. So we cannot fund yet at a trustee sale or a sheriff sale, because you don't typically get the deed and you don't have marketable title. A company, there's all these realty bids and auction.com and all these other online auction platforms that there is actual title available. We can absolutely close in 48 hours.
I love
Pending borrower response. Here's the thing, and this may be another myth, but we're going to go ahead and dive into this right now. All too often, people say, can you close in a week? And we say, absolutely. I need your bank statements, the contract, your scope of work, and your pictures today. And they say, well, I don't have all that. You got to check the boxes still. So this isn't blind trust, right? This is never going to be private. Even any private lender, I've got people I can text right now from doing this for 23 years that would fund me $500,000-$600,000 tomorrow, but they still want to see title and they'd like the address, right? That I have to get insurance. It's not just blind trust. And I would say, with any private lender, you'd be doing them a disservice if you don't properly secure their money so that you have a way to pay them back if it goes wrong. And don't let me forget to tell you about the wire fraud issue I had last month.
Oh, tell us about it.
So we do transactional funding as well for like double closes. And it was a transactional funding loan in Florida, $638,000. We sent the wire on Wednesday afternoon, and Friday morning I text, because it was a rather large amount of money, and said, hey, is that money back? I was texting my chief operating officer. I need to go ahead and put it in the money market account so we get interest on it over the weekend. And she goes, let me figure out what's going on. We actually didn't get it back yesterday like we were supposed to. An hour and a half later, I get a text message. Hey, big problem. I need you now. I call her up. She's like, yeah, the title company was a fake title company. The borrower was a fake borrower. The money's gone. None of the phone numbers work. So we call our bank. We start this wire recall process. We call the FBI. We do all sorts of things. And long story short, we got our money back on Monday because the bank was able to successfully recall the wire. We had insurance on the wire through a service we use called Funding Shield. We would have eventually got our money back one way or another.
Yep.
But it could have taken 6 months. And private lenders want their interest, whether it's wire fraud or not. So just be very careful not closing with a reputable title company ever.
Yeah, that's such an important point. I love that. Ron, don't worry, we're going to give you an opportunity to connect with Tim and his team. Don't worry about that. You'll be able to connect with them. So, all right, let's go to the next slide. What do I got next? I don't even know off the top of my head. Oh, yeah. So let's just talk about a few things. When people talk about other people's money, as a lender, how would you define that to somebody? Like, I know what it is, and you know what it is, but how do you really define what other people's money means?
I've been using other people's money since I got started.
Yeah.
As a private lender that will do fix and flip financing and loan you 100%, that's other people's money. One of the really common things that we encourage is, say, Billy the borrower doesn't have enough money to prove they can pay me the interest for the 6-month loan.
Mm-hmm.
We encourage Billy to call Aunt Mary and borrow money from Aunt Mary. And if it's $10,000 that we're telling them we need to see in the bank account to prove they can start the rehab and pay the interest,
Mm-hmm.
go borrow the $10,000 from Aunt Mary, have it wired to the title company, put Aunt Mary in a second lien position.
Yep.
We're going to go ahead and collect that money so that you don't just give it back to Aunt Mary tomorrow. But in
Right.
this scenario, you literally can do a 6-month loan with zero out-of-pocket money, because I'm giving you the purchase and the rehab, and then Aunt Mary is giving you the second lien, which is for the out-of-pocket expenses, like to get the rehab started, your
Right.
closing cost, and then your interest costs. So we highly encourage second liens. Anytime there's people, investors, we're all weird. I get it. Like, we get all these Zelle payments and we get these Venmo payments and Cash App payments, and sometimes, and then a title company will wire us money, and it's hard sometimes to explain where money comes from and goes. And we get a lot of investors that they just don't want to jump through the hoop. They don't want to have to tell me where they got $150,000 yesterday. Uh, it's important to me because I don't want you to borrow money from Aunt Mary to show me you have the cash in the bank and then just wire it back to her the next day.
Right.
And you don't have access to the capital. Then you could fail. And we want to be friends, right? And we don't want to be on the collection end of a phone call. So a lot of customers that are operating strictly on other people's money and doing it quite successfully.
I love that. Good. Danny asked, any gap funder you recommend?
Depending on your geography and where you're at, I don't have anyone. I can tell you, online forums is a great place to find people. Your local real estate investor club is a great place to find people. Other places you find private money, dentists, doctors, they're typically a good place to find private money. Always secure it though. My only advice is it will make you a lot easier to get the private money if you say, look, on average, I need $20,000 per property. I put you in a second lien position. You get paid back when closed. You have insurance from the title company. You have insurance from the property and casualty company. We have this wire insurance, right? Like it's insured. Don't say safe, but as a guy that's been doing this for a long time, when you tell someone it's insured, it feels safe.
Sure. Yeah.
So I don't have, Ron says I have gap funding. Yeah, build up a track record, and gap funding is pretty easy because there's a lot of people local that they'll take a bet, and even if it's $10,000 and you're paying 18% interest, it doesn't really matter, because if you're trying to make 50 grand and you got to give up $9,000 of it, and you can do a deal with no money involved, winner, chicken dinner.
Yeah, exactly. No, I love that. Actually, Dana, Stephanie, and Jenny do some gap funding as well. So our investment angels. So good. All right. So we got the OPM out of the way. Thank you for that definition. All right. So there's really 4 types that we're going to chat about today real quickly. And I really just wanted to kind of come from your perspective, Tim. So traditional financing, there are some limitations to traditional financing. What are the things that sort of make that not as effective?
I have bought nearly 2,000 houses. It may be more. I stopped counting. And I have only signed mortgage documents with my personal name on them 3 times. Okay. So, and they've been the personal residences I've lived in. I would say traditional financing, number one, it impacts your personal credit score. Even if you deed the house over to an LLC, there's a paper trail
Right.
that lawyers can go back through. You can get it into a trust and it's pretty protected. It's limited. You can't really continue after property 7 to 8. I mean, you can get 9 and 10, but it's
Yeah,
just more
exactly.
difficult.
Yep.
And the biggest thing is it's typically based off of previous performance, not future performa.
Okay.
So, the traditional lenders will look at your debt to income ratio. They'll look at past rent collected, then they haircut the rent, and then they look at how. So it's like this weird combination of like it's underwritten on the rental cash flow, but also your personal income. So it's really limited. And I'm not. We created the debt service coverage ratio loans, which really just it's the best product ever. And I created that 10 years ago at B2R Finance when I founded that with Blackstone. And that is an amazing product because that's just based on the rental income. You do have to have a credit score that, is important, but it doesn't hit your personal credit and we require you to close in your company name. So it's just an all-around better product. And right now, I can get nerdy. Since it's based on the 5-year Treasury bill, not the 10-year Treasury bill, oftentimes the rate's about the same. There's been times in the last 2 years where the rate for a DSCR commercial loan was cheaper than the traditional financing.
Right.
Private lending it's a term the industry is attempting to change on us, those of us that have been doing this a long time. The big guys like Kiavi and RCN and they want to call themselves private lenders now. But historically, private lending is when you're doing business with an individual that is willing to loan you money based off of you or the deal. Sometimes it's not even the deal. It's just they know you, they trust you, and they're willing to loan you money.
Right.
It's more of a relationship loan. Typically, there's very little structure around it, and it's also a lot less reliable because just what was it? Gosh, right before the first of the month, a buddy of mine I've known 20 years texts me. It's on a Friday. He's like, "Hey, I'm buying a pre-foreclosure. Got to close Monday." And he's like, my private lender's in Mexico City and I can't get a hold of him. Right. So that's the problem when you're dealing with someone that's not a company is,
Right.
we get sick, we have vacations, and sometimes the good deals. Now I was able to get that funded for him on Monday through Turnus because that's just that's how we roll. But that's just one of the drawbacks. But private lenders, I mean, it's the back. You've got to have, you must have them in your back pocket for either gap funding or holistic funding. Or any combination of the two. Hard money is my favorite, and I do hard money financing. That's Turnus's core product.
Let me ask a question real quick. Why do they call it hard money? Like, where did that come from? I've always wondered that. I've never gotten a real straight answer.
23 years ago, I never asked the question. I just asked, how do I get it? They've been calling it that since then, and I would imagine because it doesn't feel that good. Historically, when I first got into this business, I mean, hard money was 18-4. I mean, 16-4, 18-2. I mean, 18-2 was a good deal. At Turnus, our standard rate is 12-2. I tell everybody on our fix and flips, I tell everyone there's good, fast, and cheap, and we're not cheap, but we are good and we are fast. We don't pull credit. We don't do appraisals. I started this company last year with this thesis. If I can buy houses off of comps and pictures, why can't I loan you money off of comps and pictures? Right. And that's how we're able to move so fast. We do check your background to make sure you're not a terrorist, right? And or someone that commits fraud all the time, just not who we want to do business with. I say fraud, felon, or a fugitive. And then, we just look at the deal. And if the deal pencils, we'll do the deal. It's 70 LTV. We do, 100% financing, 100% of cost, in about 18 states right now. If you're that borrower that wants a lower rate or a higher loan to value, we can do that product, but you're now not fast. You're good and cheap, right? So we
Right.
just had to trade off fast because to get the rates lower, like the big boxes, you have to do an appraisal. You need to
Yeah.
pull credit. We need to, get the blood of your firstborn. There's all sorts of things that we have
Totally.
to do, and it takes 2 to 3 weeks, right? Not 2 to
Yeah.
3 days. So there's trade-offs. We closed a fix and flip loan in North Carolina. Yes, we are. Last week, it's a $600-something-thousand loan, and we got the rate down to 9.5% interest, and they only paid 1 point, and we got them up to 75 loan to value, right? But they have a 780 FICO score and $500,000 in the bank. So it's just different loans. And then another cool thing is I love that you put crowdfunding on here because crowdfunding is very difficult in the actual term. Crowdfunding is laden with legal risk and complications. Right now at Turnus, when you give them our information, investors can actually invest in Turnus and own part of the company. So we're actually selling shares in the company through a crowdfunding offering. Cost, tens of thousands of dollars to get started. There's SEC rules. You have to comply. I can't promise returns or any of this other stuff. So it's different when you say crowdfunding. Now, the way I start companies is I get to know people. I go to networking events. I get on forums and I become friends with people. And then when I have a business idea, I call Craig and say, Craig, I'm going to start flipping houses in Tampa. You're a guy I trust. Let's start a new LLC. And when we start this LLC, I'm going to put 100 grand in, and my buddy Bill is going to put 100 grand in. And Craig, you don't have to put anything in, but you have to do all the work in Tampa, right? And we're going to start. And so it's a method of forming a new entity with your friends. That's what I really recommend people do, because then you have an operating agreement. Then you have rules. Then you have roles and responsibilities. It's clear who's putting what money in and what you're allowed to do. That's crowdfunding is really difficult. I've got some recommendations. If people need it, they can hit me up after this. If they really want to do a crowdfunding raise, I think the maximum you can do is $5 million a year. I think you have to do like a minimum of 10,000. And like, why would you spend 50,000 to raise 10,000? So you really have to grow forward and really know what you're going to do with the money.
Yeah. Okay, good. So let's answer some of the questions real quick too. So if you want to build a new house in this current or future climate, is it better, cheaper to buy a foreclosure with a rehab loan for the land, since the utilities and foundations are in good condition, knock the house down and build new while keeping that footprint? It's kind of a big question.
No, I think if you're going to knock it down, get rid of the footprint altogether. You're going to save on impact fees because you're already going to have a water meter, electric meter, a sewer tap. So you're going to save there. But typically, if it's in bad enough condition that you're going to knock it down, you're going to leave a legacy problem underneath the new structure. And so I say start new all the way. Now, if you buy something, I've done this a couple times and it's worked out well for me, built in the mid to late 80s or even the 90s, that has a good post-tension foundation on it. Add a second story, get an engineer involved. I find that to be a very good additive strategy, especially if you find the smallest house in the neighborhood, right? Because then you know what it's worth today, and you can find other big houses with that square footage to have a really good target for what it's worth in the future.
Yeah. Yeah, we have a neighborhood in Tampa called South Tampa where we call them McMansions. So there were all these little small houses on fairly large plots, and then people started building the big McMansions on them. And so there's all these big houses and these little bitty ones. And so it was very easy to say, well, this house, when you get it, it's going to be worth whatever you, rehab it to. So I love that. Danny had a question. Is there a prepayment penalty on your DSCR financing?
There are ways to get no prepayment penalty on DSCR, but it's going to make the rate so high that it doesn't make sense. Okay. The most common thing we see right now is the standard debt service coverage ratio loan, DSCR, long-term rental loan, has a 5% prepayment penalty in year 1, 4% in year 2, 3% in year 3, 2 in year 4, 1 in year 5, and then nothing. And it's a 30-year loan. Now, you can go, we call that a 5, 4, 3, 2, 1. So it's a declining prepayment penalty. Then you can, some people will just do a 5, 5, 5, 5, a 5 for 5, 5% prepayment for 5 years. The most common, what we're seeing people do is no points and a 3-year prepayment penalty. That's a step down. So it's 3, 2, 1. And they're calling them Band-Aid loans, right? It raises the rate to like 8%, but they'll do interest only as well. And so it's like a bridge loan. So it's an investor that they just don't think that they're going to be stuck in the rate for too long, but they've got to get out of their private money or hard money loan. So they're doing a 30-year DSCR on interest only, and they're buying the rate down. I mean, they're paying a higher rate to get a shorter prepayment penalty. I'll tell you this. If you're talking to someone about a DSCR loan, and we're happy to help you, you have to understand there are about 50 different structures, from paying extra points to get a lower rate to paying extra points and taking a 5, 5, 5, 5, 5 prepayment. That's the absolute lowest rate, as long as it's below 70% loan to value and not cash out. Because once you get above 75 loan to value or above 70, it's riskier for the lender, because if property values go down, et cetera, et cetera. So everything from, if it's a purchase, refi, or rate and term refi, or cash out refi, all 3 of those have a different base rate. Lower loan to value, lower rate; higher loan to value, higher rate; more points, lower rate; lower points, higher rate.
Yeah.
More expensive prepay, lower rate; cheaper prepay, higher rate. And the magic is in putting those together where they meet the needs of the customer and making sure the customer understands all of their options. And I feel like we're really good at that.
Yeah, I love that. That's wonderful. I love that. So one more question, actually 2. Do you have loans for EMD for wholesalers? Do you do that?
I don't yet. I have done it a couple times. I've been burned, but I've also made great money. I don't do that. No.
That could be a gap.
I want to. There's a business model there, but it's very high friction and high administration. What we're really looking at doing is creating a second lien or line of credit product that people can secure against their rental properties and use for that kind of thing. We're almost there. We're testing.
Yeah, no, I love that. All right. And then Brandon's got a question. His question was, since most of your money goes into buying the land, clearing that land, and digging foundation. Oh, that was just a response, I think, is what he was saying there. Sorry about that. And then there was one more. Oh, can you obtain DSCR at 10% down payment of the property, or is it 20% or more requirement for DSCR?
On a purchase, it's always 20%. On a rate and term refinance of like a Turnus 100% financing loan, there is no down payment requirement. You just got to wait till day 91 to do the rate and term refi. On a cash out refi, you typically have to wait 5 to 6 months. But on a purchase, on a DSCR, 20% is required.
Okay, perfect. Therese wants to know if you work in Baltimore.
Yes.
Perfect. This is the year of partnership. So it's Dania. Yeah. How can I be the one that does all the work? Well, you're going to have to reach out to Tim at Turnus. He'll show you how to do that. Is it possible to buy up HUD homes, and do you provide funding for it, or is it even worth it? Kristen wanted to know.
Depending on the market, we're seeing HUD homes and foreclosure purchases begin to come back. I remember in the day when we bought HUD homes back in the 08, 09 crisis, that you had to like go pick up the HUD key and there was one key at the realtor office you had to drive around with. Obviously, I think we're past that now. It is possible to buy HUD homes. Just, I mean, kind of the rule of thumb with anything is the bigger the market, the more competitive it will be. So a lot of the big box wholesale shops, I mean, they have auto algorithm robots that just fire these offers out. So, but I know, I actually had lunch with an investor here in Dallas today that he said he is just crushing it on pre-foreclosures right now. So I think it just depends where you're at and how dialed you are on that strategy.
Yeah. Okay. Yeah. Margaret asked, who does the loans in 48 hours? Tim does over there at Turnus, not Connected Investors. Do you work in California? Yes or no?
Not yet.
Not yet. Gotcha.
It's the hardest state in the nation to get licensed in.
Fair enough. Teresa wants to know if she can have your contact. Just so everybody knows, you're going to want to talk with Tim and his team. What we're going to do is we're going to be sending an email when this session's over. You'll get it sometime tomorrow. We're going to include all of Tim's information. But I am also going to show you real quickly, not to step on Tim's toes, I am going to show you privatelenders.com. Tim is one of our partners for privatelenders.com. And I actually want to ask you a question about that. I've got a couple more slides, but I think we're having a good conversation. So I'm going to go to this question. When someone is filmed, Massachusetts, Danny wants to know, yes? Beautiful. All right. And abandoned homes. Do you work with abandoned homes or not?
Absolutely.
Love it.
I love them. They smell great. Smell like money.
They smell like money. I love that. So one of the things that I tell folks when they're, looking at our software, Tim, is we have the ability to quickly fill out a form, and then the form matches with the different lenders that we have a relationship like you guys. So what happens is when they're filling out the form, there's 3 or 4 pieces of information that's required. The first is the property address. The second thing that they ask is a little bit about you. How many deals have you done? So that question that they ask the person who's filling out the form is how many deals. The third question that we ask is what's your credit score? When I'm describing that to people, what I'm telling them is, and correct me if I'm wrong, but I believe that private lenders or what you guys are doing is you're typically looking at that deal first. That's the first thing you're kind of peeling out, is the deal. Then what you're saying is, okay, what about you? What's your ability? Have you done this a few times? Where are you new? Have you done it a bunch? And then the last question is your credit, like you as an individual. So is that the right way to look at it? Do you look at it a little bit differently when they're filling that out, you think?
Yeah, I mean, I'm going to say private lenders typically don't look at credit.
Yeah.
That's why we don't look at credit. The big guys and gals out there do look at credit now. I think the biggest thing though is it's all about, if you combine those middle two, Craig, it's all about can you show the ability to repay the debt?
Yeah.
Right. It's the money to make the payments, the history of making good payments. A great mentor of mine in the real estate and investing business. By the way, somebody said something about partnerships. I'm going to go really quick on a side tangent. Somebody asked me recently on a podcast, tell me about the first deal you did on your own. Okay. I'm not sure I've ever done a deal alone. I've always had partners and mentors and teammates, and that's just kind of the way I am. A great mentor of mine said, as a lender, you have 3 jobs. Number 1, you have to make loans. And this is important for the audience to understand, because that's how we make money, right? So we're not trying to say no. We're trying to say yes. Like we have to say yes. So that's number 1. Number 2, they have to be profitable loans. What does that mean? So if I raise a debt fund that I have to pay an 8% interest rate to my investors, and then I have to split the interest with them, and they're hoping to make a 10% interest rate. If I loan you money at 8, it doesn't work, right? So I have to loan the money out at a rate higher than I have to pay. So they have to be profitable loans. And finally, I have to feel like the loan's going to get repaid, because the math on a foreclosure is completely different than the math on a loan that gets repaid. So you're exactly right, Craig. We look at the asset, and the asset tells us whether or not we think it's going to fit the exit strategy. And, look, I've done, thousands of houses on my own, as a buyer, and I've done 50,000 plus as a lender. I know a thing or two about what I'm looking at. So the first thing is, can this house actually execute the strategy the customer said it can? The second is, does the customer have the ability, technical or otherwise, right? If you're in California and you're buying in Massachusetts, okay, that's a 7-hour plane ride, right? I mean, do you have a team on the ground, right? Have you done it before in Massachusetts? Just because you did it in Cleveland doesn't mean you can do it in Massachusetts.
That's right.
Right.
Yeah.
So we look at your ability to complete the project, and that includes if you have the money in the bank to pay your interest rate and pay the interest and all that. And then the last, for a lot of loan programs, is the credit score, because that, frankly, is the final button that says, hey, this young lady or this young man typically follows through on their commitments.
Right.
And I see specifically on the DSCR, and I get it. Actually, this is like, you got to get someone on here for credit repair, because I see. So there's buckets, there's FICO buckets, right? The minimum FICO is 660, and between 660 and 700 is one risk bucket, right? 700 to 740 is another one. 740 to 780 is another one, and really 780 up is just gravy. And I see so often that people are off by 5 or 10 points, and you're just like, I mean, so it's like, do yourself a favor right now. If you have any problems whatsoever with your credit, start working on it, because it will save you tens of thousands of dollars and ultimately millions if you're successful in this for the long run.
Yeah.
I don't even know if I answered your question.
You did. You totally did. And I'm basically telling them the right thing. The only thing that I mentioned is that they do look at your credit. You don't technically look at credit, but would you look at credit if you weren't certain about the deal or the person? Could that be another factor that you might take into consideration?
Yeah, because like
maybe I'm a little bit newer. I'm a little bit newer.
Yeah.
I haven't done a bunch of deals. I got a good deal. I got good credit, but I have not done a whole lot of deals. How does that play for you?
I think we look at credit if you're pushing the envelope.
Okay.
If you're buying a $1 million house in a $500,000 zip code, right? If you're doing a massive heavy rehab, when normally you've always done cosmetic, and now all of a sudden you're gutting the house and adding a second story and doing an add-on in the back, because there's extra risk factors the more complicated the project gets.
Yep. No, I love that. Good. All right. So real quickly, what are 3 reasons to use OPM? I have 3: scaling your business, reducing risk, and your tax advantages. Would you agree, disagree? Anything you want to add?
Wow. Yes. So number 1 is scale. And as a finance nerd, which I didn't go to college at all, much less for finance, I read a book called Richest Man in Babylon when I was young.
I love it.
Getting out of the Marine Corps. And
I love Richest Man in Babylon. Yep.
It really talks about making money with money, right? And
it sure does.
And once I learned to look at money as a tool versus money as a result for hard work, because I was raised that money was a reward, was a result, right? Now I've learned to look at it as a tool. And, I look at the capital stack, Craig, right? If I have to put 10,000 into a deal and I only have 100,000, that means I can only do 10 deals, right? And my return on that capital is going to be limited to the net cash that I get from all those deals. If I can have $0 in a deal, well, my return is infinite. But also, I'm gonna get way off track. So yes, I completely agree. It's the only way to scale. It's the best way to scale. And if you don't believe me, look at Blackstone, and there are 88,000 houses, and they got debt on every single one of them, and it ain't their money. Reducing risk. It does reduce risk, but also increases risk. And I would say your track record is the only thing in this business that you cannot buy or sell. So you're stuck with it no matter what. And you can't get it until you start, and you can never get rid of what you do. So don't take debt as a way to quote unquote not have to pay something. That's the only, it does reduce risk, because if you're able to maintain cash and able to offset your out of pocket to have additional reserves, definitely reduces risk. But if you're thinking that I can borrow from the dentist and not pay the dentist back,
Yeah.
no. And then tax advantages, obviously, you know, especially using IRAs. So it's one of those things. We loan to an IRA just like it was a normal person, because it is. I mean, it's just another entity. It's just another business. I don't get a personal guarantee out of it, but I don't even pull credit on other people. So I think buying in your IRA, I think getting depreciation, offsetting your basis with depreciation is just, it's huge. I mean, I haven't paid personal income tax in 4 years, and I make a lot of money. And the next several $1 million that I make on my 1040 is tax free because I've got enough depreciation. So yeah, I mean, the more assets you can buy, the more assets you can keep, the better the tax advantages, hands down, end of story. And then the last is advantage really is just blended rate of return, right? Like once you get to where you're thinking return on equity, you're thinking, how can I take the work that I've made beforehand and make it keep working for me? Danny, who does your tax? Yeah, my CPA. You know, yeah. So it's just the reason to use other people's money is compound rate of return, stacking what you have quicker. So nerd moment. I'm going to go ahead with this. If you have $1 million at the age of 30 and you get a 20% return on it, you got 2 million at 35. If you keep getting a 20% return, right, you've got 4 million at 40, 8 million at 45, 16 million at 50, 32 million at 55, 64 million at 60. And then the number gets really big, really fast. So the quicker you can get to large asset bases, not equity. People think it's equity. It's not. It's large asset bases, because the appreciation, the inflation is based on the asset value, not your equity.
Yeah, I love that. All right. So real quickly, here's your chance to just give us a high level overview. How do you guys support investors? So for instance, Mark and Brandon and Danny and Greg, they all want to talk to you. How do you support them?
We loan the way you buy. We're a company that's for investors, by investors. My core values at Turnus are speed, transparency, accountability, respect, and service. We're going to tell you yes or no really quickly. We're not going to make you wait. We're not going to drag you around. Transparency comes into fact. We're not going to lie to you. We're not going to drag you on. We're not going to let you think you have money when you don't. We're going to own our mistakes. We're going to be accountable. We're going to be respectful of you in your time and of our time. We're not going to work with jerks, and we're not going to,
hopefully be jerks.
or be jerks. And then service is something I get goosebumps every time I think about it. We make millionaires. This business has been really good to me. My family, I've had to evict family members, and I mean, I don't come from money, right? And this business has been very good to me, and I love sharing that with other people, and I love helping other people realize a level of, I hate to say freedom because everybody uses that, a level of success and accomplishment that is beyond all of our wildest dreams. So at Turnus, that's what we do. So we don't use Wall Street's money. We use my money. We use my partner's money. We use your money. That's one of the reasons that we're selling shares in the company, because the more that I loan with non-Wall Street money, the more I can offer non-Wall Street loans. So I mean, it's a really cool venture. I reread Simon Sinek's book, Start With Why,
I love that book.
2 years ago. Turnus is Latin for threefold. The three pieces of the triangle represent the three core reasons everyone ever gets into this business. Number one is they want to make money. They want to make some money. Number two is they want passive income or cash flow. And number three is they want to build wealth or a legacy. And so those are the three triangles that make up Turnus. Those are the three core pillars we stand on. And we help you make money by enabling real estate transactions to happen quickly and smoothly without a lot of hassle. We help you make cash flow by offering alternative investment strategies, but I'm also helping you build rental properties and buy rental properties. And then we help you build a legacy and create wealth by offering shared ownership in the lender for as little as $1,000. Like, I mean, it's not like hard to buy shares in my company. And then, you know, debt funds, but then also making it easier to build a rental portfolio. So that's what Turnus is. That's what we're about. And that's what we wake up and live to do every day.
That's great. Thank you, Tim. Wow, look at that. It's already an hour, almost an hour complete. This is the least that I have ever talked on one of these. So thank you for filling in that void there. I want to make sure that we just answer a couple quick questions, and then I want to share with everybody one quick thing before we let you back loose. How do you release construction funds? Is it based on inspection or reimbursement, meaning the flipper has to pay and get reimbursed?
I am super proud of this. We pay our draws typically in less than 24 hours. You go fill out the little web form thingy and it texts you a link, and the link goes to you or your contractor or whoever you want. You go take the pictures. The pictures upload immediately. My draw inspector looks at it. As long as the work is installed, we release the money.
Love it. I love that. I love that. Good stuff. Oh, one question Brandon was asking, why wouldn't you set up your partnership in a nonprofit and go fix parks or plant trees? I'm not sure what he's asking there.
I mean, I'll be honest, because I love money and I pay a lot in taxes and I don't like city governments. The charities I give money to are like St. Jude, etc.
Okay, perfect. If we put together a group of experienced, well-funded investors, would you do multifamily loans on good deals?
If I can't do it, I'll point you in the right direction. That's my promise.
Love it. All right, cool. All right, so some of the folks definitely want to meet with you. When do I request the funding? When I am interested in oh yeah, that's a really good question. So we have this a lot, and this will be probably a sort of a final question. There's a debate, right? So we say, hey, fill out the form, get yourself talking to a lender. On the other hand, I feel a little contrarian. It's almost like, hey, I want you to tell me if I can get some funding, and you're going to be like, well, what are you going to be working with? I don't know. All right, well, how much do you need? I don't know. So it's kind of like it's a chicken egg. But I think, in my opinion, you really need to have something in your hand before you start the funding process, don't you?
So everything in this business is chicken or the egg.
Yeah.
But like you said earlier, there's three parts to this, and it starts with the asset. But you should pick up the phone and talk to multiple lenders. Find someone you jive with. Find someone that can explain it and make it simple to understand. I've got 8+ salespeople, and we're always hiring more in Charlotte to talk to you. And that's, we call them account executives, not loan officers, because we want them to help you set up your account and explain to you how it works and what the timelines are. And yes, we can close in 2 days, but we need 1, 2, 3, XYZ, and go ahead and start getting your bank statements in a Dropbox and that kind of thing. So I'm a huge proponent of getting to know your lender. And a rule of thumb for me is always, you look for money when you don't need it, not when you do.
Okay, I think that's fair. I think it's really, really good. It's up to you guys, however you want to approach it. You know, I think that hearing it right from a lender's mouth, though, is going to create your comfort level. You'll know what to do now. And then the last one is, so folks are asking how can they meet you? I'm going to show them two things. One, when we're done, we're going to send an email to everybody that attended, thanking you for showing up. We're going to give you a link to the free trial. We're also going to give you Tim's contact information for his business. So you're going to be able to inundate him with emails, so that very soon him and his team will be starting to inundate you with phone calls and emails trying to lend you money. All right. So what I wanted to do real quickly, and I wanted to just share with you what Tim is a part of. Tim is part of our privatelenders.com website. He is a partner of ours. He is a lender. So what would happen is we have a form. In fact, I'm going to show you all the form really fast. I don't know if you've seen the form or not, Tim, but it's really cool. It's very simple. So we have 2 ways to get to the form. We do some daily training if you want to know how to fill it out and all that, but let me just show you real quickly. Once you log into the site, so you're going to log in, you're going to do your login stuff. I hadn't logged in. Let me do that real quick. It's over on a screen over here, so I'm not looking at you guys. So we're getting signed in. All right. So if you wanted to get funding, there's 2 things. There's 2 ways to do it in our site. The first one is we have on the left-hand side of this page, the navigation pane. You see where it says dashboard, my list, find deals. Well, we've got a get funding button right here. What I call this is the ad hoc get funding. So if you just wanted to put in to do a funding, like you don't have a specific property that you're trying to focus on, this is where you would start it. You're going to go new funding request, and then it's going to start asking you questions, right? So the first question is, what's the address? If you don't know that yet, you don't know it yet. Well, what state are you going to be in? All right, we'll just say Arizona. How much do you need to borrow? We'll say 200 to 500. What's it going to be used for? A flip or a rehab? We'll just call it a rental. And then what type of property? Residential, commercial, multifamily. Do you guys loan on commercial property or not?
Not at the moment.
Not at the moment. So if you were saying commercial, Tim would not be alerted that, hey, this form was filled out on commercial specifically. So just keep that in mind. So we'll just say residential, and then here's how many properties have you purchased before? We'll just say 4 to 10, and then here's your credit. Now, what you want to notice is on the right-hand side here, so we can see it a little bit better. These are the things that this form is asking for. There's no questions about your credit, not your credit, like they're going to do a credit pull, nothing like that. They're not asking you questions about your social security number and all your history, just some basic questions. And this is sort of what we were talking about. What do they need to see, hey, we want to call this person and say, let's see if we can do a deal together. Because the truth is they're looking for business, right? And if they're looking for business, this kind of thing, they might go, yeah, let's give this guy a call, right? And say, hey, what are you looking for? They're going to call me to get to know me. Now, what I love about our software is I can just do a rental ad hoc, no specific property, or I could actually be in a property. So if you want to know how to do all this stuff, you got to show up Monday through Friday, 3 o'clock Eastern. So I'm just going to grab a property from one of these lists. I'm going to Charlotte. I don't know why I grabbed it. And we're going to go right to this address. If I wanted to get funding for this property, I love the way it works, guys. You ready? Boom. I hit the button. How much do you want to borrow? I don't even need to put the address in. It already shows up for me. Everything has already started. The location, the type of property. I want to borrow this much. It's going to be a rental. I'm a pro, good credit. Hit continue. Now, the moment that I hit continue, Tim is going to get alerted of this form. I promise you he's going to be. And then it's going to match with a couple. I don't know who's going to call me first, but whoever calls and whoever strikes a chord with me, whoever wants to get to know me and understand my business and who isn't super pushy, but there to help, that's who I'm going to want to work with as an investor. And I can promise you, I did this live a few weeks back where I showed this live, and it was on stage with several hundred people in the audience, and I was sharing it. And I said, watch what happens, guys. Boom. And I hit the get funding button. And I was like, all right, now at some point over the next 24 to 48 hours, I'm going to start getting phone calls. Literally within 3 minutes, my phone started ringing. You could hear it on the desk just outside of the podium. And I was like, well, that's one of them lenders calling me right now. They're eager for your business, guys. They have money to lend. They want to work with you. So in our software, we make it very, very simple. And what I love about it is whenever you fill out one of these forms, someone like Tim and his team are who we're working with. So we've vetted them. We know them well enough to say, hey, we trust them. And then Tim and his team's going to reach out to you. So just wanted to give that to you really quickly, where you can find that inside of our software. And then the last thing I'm going to do is I want to put up that this guy, right? Whoop, one more, the free trial QR code. So if you have not gotten a subscription to the software, we absolutely would love for you to do that. If you sign this, if you take a picture of this QR code, you're going to be eligible for any of the discounts that we're offering. You'll also receive an email afterwards, this session with all of Tim's information, and he's the only one that will be sharing during this session. So you're going to have a lot of folks, Tim, that are probably going to start bugging you, which is great.
You don't have my
get a look at that.
cell phone, do you?
Say that again.
You don't have my personal cell phone, do you?
I probably do somewhere. Yeah.
Let's don't include that in the email.
Oh, I thought you just meant, do I have? No, we will not include your personal cell phone. We'll give them your business number. I promise. Okay. Yeah, I think that was about, was a wrap, Tim. I really appreciate you spending some time and, you know, one of the things that happens a lot is when folks get into this business, they don't really understand the lending side of things. So you're the first one that we've ever done this with. And so I know that not only have I, and I know Dana's appreciating it, but everybody that's on the call is really, they're pleased because now they actually know what the insiders are thinking about this. And the fact that you're an investor, it kind of shows that you're really not just thinking, oh, let's get the deals. You're trying to really think about the deal. You're looking at it from the perspective that they've got. And so I think that it's a really nice match. So I'm done praising Tim, but I just want you guys to know that we like him, and I think he'll take really good care of you. Was there any last questions or from anybody? And then the last thing I wanted to say, I know I talk quick and fast. Did you want to share any tips or tricks or last minute sort of suggestions for anybody that's on the call tonight, Tim?
Yeah, I mean, I do, and then I am going to have to go. I will say, don't chase shiny objects, and that's hard to say to a group of entrepreneurs. I get it.
That's right.
But stick with what makes you comfortable. There's a lot of pressure on social media these days to maybe do a strategy that you don't feel comfortable with, or maybe get into wholesaling when you're a good flipper, or start keeping rental properties when you're a good wholesaler.
Right.
I think where I've made the worst decisions in the last 23 years is when I tried to be somebody I'm not. So find your passion, find your purpose, and then go all in. You know, the Warren Buffett approach: go deep, not wide. And I think this business can be very rewarding. You can be very successful. You can have things that only other people could dream of. And then last but not least, always give back, right? Share the knowledge, share the wealth.
Yeah.
If you found this valuable, share Connected Investors. If you find Turnus valuable, right, refer Turnus. This is a word of mouth business where a lot of people are being paid for what they recommend, and they don't have super high ethics on who they recommend. So I've known the Connected Investors group I've been doing business since, golly, I think 2014. Different companies I've started. Highly recommend them. Highly appreciate them for being a gold standard in the industry. And don't just be a sponge. Give back. Lead with value. And you will make mistakes, but don't give up. You only lose if you stop fighting.
That's right. Yeah. The only way to lose in this business is to quit. That's one of my first coaches told me, that the only way to lose is to quit. So I love that. Well, Tim, thank you so much for joining us. This is going to be a replay on our website. So if you guys maybe came in a little bit late, we answered as many questions as we could. Don't forget, we're going to send you an email on the next day. It's going to have all of Tim's information. In 2 weeks, we're going to be coming back with another session. So certainly sign up for that. And with that, what I'll say is thank you to everybody that showed up, and especially thank you to you, Tim. Thank you for taking the time out of your super busy schedule. I'm going to say it, rock on, because I see the guitar behind you. You've got to rock on.
Thank you, Craig. Appreciate you guys.
All right, everybody. Everybody have a great night. We'll see you all in 2 weeks. Thanks so much. Bye-bye. Thanks, Tim. See you, bud.